Hey guys, what's up? Alec back with the daily stock market. And look at that Friday. We see a super red day in the stock market. And right now in the crypto market, we're also seeing big dips going on. There are rumors of World War III swirling around right now, which is always good for stock market investors and stock market traders alike because it pushes stock market and cryptocurrency down, down, down. And the market usually overreacts on something that's not going to happen at all. And then once a few weeks go by, a month goes by, and things aren't as bad as they seem, guess what? Stocks and cryptocurrency bounce back to where they were before, if not larger. So it could absolutely be a good time to start cranking up your dollar cost averaging into some of your favorite stocks. Even with the dip going on, my portfolio still has a net gain of $4,500, which is around a 98% return on my portfolio. This is my M1 account, by the way, where I do all my long-term investing. If you need help with your portfolio, make sure you reach out to me, The Daily Stock Market on Instagram. Just message me here, click on Success 2024, read through some of those positive results, and let's make some money together in the stock market. Now, in this video, we're going to talk about the best stocks under $10 per share. So smash a big thumbs up. Make sure you stay throughout the entire video. Share this video with a friend. And without any further ado, let's jump right into this video. So the first stock we're going to be talking about is SoFi Technologies at $7.24 per share. They're down 4% to 5% on Friday alone. And in the last 3 months, they're only down 6%. They were as high as $9 per share, which was around a 17% gain, but they went on to fall. And from those highs, they're down 20%. If we look at the year to date, they did have a leg up here at May of 2023. We can see they went up around 60 to 80% just in the span of around 1 month. So that was very interesting. We have seen them on an upward trend for the last 1 to 2 years. So the question is, can they continue that, or will they fall back down to that low price of around $4 per share? As we scroll down, we can see that they are a negative earning company right now with a negative P ratio of 20. However, if we scroll down a little bit more, we can see that they're on the brink of profitability. Okay, they're expected to actually have a positive earnings result in the most recent quarter that's due towards the end of this month, April 29th. So all eyes will be on SoFi on April 29th, towards the end of the month, this earnings season, because we really want to see them break into that profitability. And if SoFi turns into a profitable company and stays profitable, that's going to be huge, huge news for SoFi investors. And if that happens, then I think that we can break above $10 per share very, very easy again and go into even $11, $12 per share on SoFi. Now, even if we just get to $10 per share, that's going to be around a 38% gain from $7.24 per share. So it could be a good time to enter. However, I think the best time to enter is close to $5 per share as possible. Although $7.24 isn't a horrible place to be buying, personally, I would buy like $100 to $200 at $7.24 and try to swing that up to around 38% gain, which is around $10 per share. Obviously, I'm going to be buying a lot heavier if we see $5 per share on SoFi Technologies. Now, if we look what analysts have to say about SoFi Technologies, they're pretty split, anywhere from $3 per share to $14 per share. But on average, analysts agree around $9 per share should be very achievable for SoFi Technologies, which is a 23% gain in the next 12 months, even buying at $7.40 per share. However, if we do see it dip down closer to $5 per share, obviously the gain is going to be a lot greater, buying in at an average cost of $5 per share and then selling around $9 per share in 12 months. Now, we can see where some of these analysts are coming from. We see a 5-star analyst with a $12 price target, okay, 63% success rate, and this is one of the best analysts. He is ranked 139 out of like thousands and thousands of analysts. So that's a refreshing price target to see. We also see a few more analysts with an $11 price target from Citibank. We see Kyle Peterson with a $10 price target. And this was all reiterated within the last 30 days. We see John with another price target of $12 per share. Andrew Jeffrey with a $14 per share price target. So this is a very skeptical stock. Obviously, there's no guarantees with something like SoFi. And I should have said this in the beginning of the video. All stocks under $10 per share are inherently more risky than the average stock that's not under $10 per share. Always take that into consideration anytime you are looking or buying any stocks under $10 per share. Next up, we have NEO stock at $4.11 per share. They're down 7% alone on Friday. They are down an astounding 33% in the past month. Okay, RIP NEO stock. They were closer to $6 per share in March, not even that long ago. Down 41% in the last 3 months. Okay, and it just gets worse and worse as we pull out. Now, this one's extremely risky because the downtrend has just been down, 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 down. But what do we see whenever it hits a new bottom? Okay, this was a new bottom here, June 2nd. We saw a spike up around 40% to 60%. Okay, so these little spikes that NEO has, you could definitely make some money on. I'm not saying that this is a great long-term stock, but traders, have your eyes open because we just made a new low with NEO stock on Friday, right? So there's a good opportunity that NEO is going to trade above $5 per share once again, and there's a good chance that it could even pop up to around $6, $7 per share or higher once again. Obviously, it probably will fall down lower. It could even go down to like $1, $2 per share. And these spikes come pretty frequently, so you probably only have to hold for just a couple of months or a few months, right? As we scroll down, we can see the PE ratio is -2, implying they're a negative earning company. And yes, we can see that they are far and away a negative earning company. They're not even close to profitability. They were supposed to be at profitability years ago at this point. If you followed any of my analysis on this company, remember our whole theory was that NEO should be a positive earning company by 2021. It's 2024. They're still not a positive earning company. So therefore, we don't really like this company. And until they could prove they're a positive earning company and they can make money, they're growing their revenues, then personally, for long term, I'm staying away from NEO. But the short term, just a couple months, there's a good chance that there is money to be made with NEO. Now, analysts don't really touch this stock too much, so take this with a grain of salt, but they have a 68% upside on NEO in the next 12 months. Remember, take it with a grain of salt because if we scroll down, we can see that these price targets were reiterated month ago, 12 days ago, 14 days ago, and a lot of one-star analysts are coming through with their price targets. So I'll give you my price targets instead. Put a $5 price target to sell if you are buying at $4.11. That's a 20% return and should only take around 30 to 60 days, 90 days max. But there is a very, very good chance that we will see NEO above $5 per share or at $5 per share before it begins to continue its downtrend that it has been following. Okay, now let's talk about Rivian at $9.10 per share. Okay, they fell 4.6% on Friday, and in the last week, they're down 10%. Okay, April 10th, earlier this month, earlier last week, we saw them at $10 per share, so they wouldn't have even made this video if we were recording it last week. However, they're under $10 per share, so they're free game. They're also down 25% in the last 1 month, 48% in the last 3 months, and we can see that an astounding 58% drop year to date. They were closer to $21 per share. Now you can see they go through ups and downs and spikes and peaks and lofts. So this is going to be another good one for traders, and it's going to be more risky for long-term holders. So traders will definitely be liking the stock better than long-term holders. We can see we have a fresh low, an all-time low on Rivian. And just like the stock before it, NEO, anytime Rivian makes all-time lows, we see a spike back up, okay? It happens time and time again. Here on February 4th, we saw a low with a spike. Here on March 11th, we saw a new low with a spike. Here on July 8th, we saw a new low with a spike. and it happens every single time. Another one on June 23rd with a big spike. Now we're seeing a fresh low. So buying in at $9.10 per share and trading it up to only $12 per share would get you around a 30% gain. And I think that could be happening in just a few months' time also. So that's a 30% swing trade on Rivian. Remember, these are extremely risky swing trades, so there's no guarantee. And if you want less risky swing trades that have more of a guarantee of working out, make sure you message me on Instagram, the Daily Stock Market. That's where I do my private trading. And anything I put my personal money in, $500, $1,000, $5,000, I'm posting every single trade I personally take. Not only swing trades, not only long-term investments, but we do a lot of option trading too. Option trading is the best way to make the most gains in the shortest amount of time with the least amount of risk. Okay, so message me if you want to learn a little bit more about that. Also, beginners are welcome, even if you know nothing about option trading or the stock market. I have programs for the most beginner students as well. So don't be afraid to reach out to me. Let's make 2023 your year of stock market success. But diving back into Rivian, $12 per share is extremely realistic, and that's a 30% gain on Rivian stock. Obviously, it's a very risky trade and a risky stock in general. We see the PE ratio at 1.9. They're a negative earning company. And as we scroll down, we can see that they are far and away very negative earning company with a negative EPS that's expected at negative $1.15 per share. Okay, so remember, this is a little bit newer of a company. They were listed in 2021. So, a few years of unprofitability is okay. But if they continue with their unprofitable company, into this year, next year, and 2026, that's going to be extremely concerning for long-term Rivian automotive holders. Now, in analyst eyes, this one has the most upside out of the three stocks we talked about in this video, and according to analysts, with the least amount of risks. Right now, it's sitting at $9.11 per share, and the downside, the absolute downside, is $8 per share, according to analysts. On average, they have a $16 price target, which is around an 85% upside in the next 12 months. And some analysts have them as high as $36 per share, but that's probably best case scenario if everything goes right, which obviously that's not going to happen. So $16 per share is a more realistic price target, in my opinion. And $16 per share is still pretty high, but I definitely think they can at least pop to $16 per share before heading lower and lower. Okay, because we see Rivian popping up a lot in the past, and that's just what the stock likes to do, tends to do. It gets even picked up by social media a lot, and the EV community. Diving in a little bit deeper where these analysts are coming from. First one is a Bank of America security analyst, John Murphy, with a $21 price target in the next 12 months, and he just signed this 5 days ago. Has a 52% success ratio, so it's basically like flipping a coin if he's right or not, which are pretty good odds when it comes to the stock market, and a $21 price target. That's overall 100% gain he's predicting in the next 12 months on Rivian stock. We have a Goldman Sachs analyst, 62% ratio success rate. Okay, we have a $11 price target, which would be around a 20% gain in the next 12 months. He just reiterated that 7 days ago. Adam Jones is next with Morgan Stanley, $13 price target. I was right in between those two analysts with a $12 price target, and I do not think it'll take 12 months like these analysts are expecting. I think it'll only take around 2, 3, 4 months to get that $12 price target once again. I'll scroll down. You can see where some of these other analysts are coming from. But a lot of the time, I don't like to scroll down anything past 1 month. It's a little bit irrelevant. I like to look at the most fresh and recent data. So I hope you guys appreciate these videos. And if you do, all I'm asking for is a thumbs up on these videos. Comment below what you guys want to see next. Comment below any stocks that I missed out that are under $10 per share that are your favorite. Let's get the comment section going and a discussion. I personally love talking about stocks, so if this got your wheels up in your head turning in a good way, just leave a comment below. Smash a big thumbs up on this video. I do it for you guys. And as long as you keep liking these videos, I'll keep making them for you. Thank you for making it to the very end of the video, and make sure you're subscribed on YouTube so you're not missing out on any other full-length videos in the future. Thank you guys one last time for all the love and support. I'll see you guys in the next video, and remember, don't time the market, buy the market. Peace.